Hi guys, Will here from WB Trading and welcome back. If you are new to the channel, please do hit that subscribe button and tap the bell icon so that you don't miss any of the free content that I share with the trading community here on YouTube. So I was away visiting my parents in the north a few days ago, and whilst driving back I was listening to a podcast. I think it was one by Rob Moore. I'm a massive fan of Rob Moore and his podcasts. I can't quite remember which episode it was now, but he mentioned a quote from Richard Branson, which really caught my ear. And it caught my ear to such an extent that I actually stopped, wrote it down, and the quote was, "An entrepreneur is someone who makes enough money to cover their losses." And I just thought, that's trading. That's trading in a nutshell. And it just really inspired me. And I thought, look, I've got to put a video together for the YouTube channel to help everybody out, because there are a lot of similarities between entrepreneurship and trading, right? With the obvious one being taking calculated risks. And at the end of the day, taking risks full stop, right? That's the career field that we're in. And it's interesting that I actually heard that quote that day, because literally just a few days earlier, a friend of mine who's been interested in getting into trading was here at my place having a coffee, and he actually asked me, I remember we were sat at the table having a cup of coffee, and he said to me, "Well, trading is gambling though, isn't it? Trading's like flipping a coin, right?" And in my opinion, as someone who's been actively trading for instance years now, whilst I would agree that trading is a form of gambling, I certainly wouldn't say that trading is as good as flipping a coin. No. And I'm sure some of you will agree, I'm sure some of you won't agree, and in fact you can let me know in the comments section below the video if you agree or not later on, but let me explain why I do completely disagree that trading as a whole can be compared to a coin flip. Now, if you're trading without any kind of strategy, and maybe you're just buying stocks you believe in, right? Maybe you like Tesla cars, so you've bought Tesla stock. Maybe you like Starbucks coffee, so you've bought Starbucks stock. Maybe you believe in the future price of gold, so you've bought gold, right? That is a gamble. That is a coin flip, because there's no edge there, there's no strategy there, you have no idea why you've bought where you've bought, you'll most likely have no idea when you'll actually sell, you won't have an accurate proven profit target, and so on. So again, that is a complete coin flip with no edge whatsoever, right? And there's nothing wrong with that. If you don't mind taking a punt on the off chance that you'll be right, have fun. There's nothing wrong with that. Many people do that, but again, doing that is a definite coin toss. But on the other hand though, if you have a strategy that's statistically proven to provide edge, that tells you exactly where and when to buy or sell, where to place an accurate stop loss, where to place an accurate proven target, along with explaining why, that process over the long term is not a coin toss scenario. No, that's trading with edge. Yes, it's still gambling, so to speak, because you never know whether any one trade or even any series of trades will result in a win or a loss. But with enough trades taken, and with enough trades taken properly, with accurate entries, accurate exits, risk well managed, performance metrics logged accurately to aid decision making, you're going to come out ahead. You're going to come out profitable, and you're going to make money. And that's not some opinion, that's not some kind of guess. That's the basic mathematics of a positive expectancy playing out across a large enough sample size of occurrences. Again, it's trading with edge like a professional. It's basic numbers, it's mathematics. I also wanted to share a tweet that Ivan Bierge shared on Twitter earlier. And if you don't know who Ivan is, he's a fantastic trader, fantastic author, definitely worth checking out all of his books on trading psychology. And the quote is this. He says, "A trade is a bet. A bet should be evaluated as good or bad based on the odds and the stakes, not the outcome." And what he's saying here is, you need to evaluate the trades that you're taking based on their probabilities. So for example, the odds and the stakes, right? And even with this box ticked, even when you are trading with edge, any one single trade can result in either a win or a loss. Any small series of trades can result in either a win or a loss. But as long as you're trading with a statistically proven edge, you're going to come out ahead over the long term. But let me know your thoughts on this, guys, because I hate to think that I'm just talking at you here. Do you understand how Hedge works? If so, drop me a comment below the video and let me know. Do you agree with me that trading is a form of gambling? Again, let me know in the comments below the video and give me your thoughts. It's always great to chat with those of you who take the time to visit the channel. And I have to say, I really mean this. I really do appreciate you all being here. So again, it'd be great to hear from you as always. Pause the video for a second now, scroll down, and again, let me know your thoughts in the comments section. And by the way, just very quickly, if you are learning something here today and you are enjoying the video, it'd be really great if you'd also take just a very quick second to hit that thumbs up button. That'd really help me if that's okay with you. So coming back to Richard Branson's words that I shared earlier, an entrepreneur is someone who makes enough money to cover their losses. Within entrepreneurship or within trading, losses happen. They're just inevitable. It's just part of the job. And I'll give you an insight actually into a loss outside of trading that happened to me recently. So for those who don't already know this, I invest in property outside of trading. I own just a very small portfolio at the moment, and they're just relatively cheap northern houses here in the north of England that I buy. I rent them out, and I recently completed on a new house that I've added to the portfolio a few months ago. My team renovated the place for me. Unfortunately, went way over budget on it, but that's another story. We finally got a tenant in when we finished it. They paid the first month's rent, and then literally a week later, I get a call from the company who managed my portfolio for me. Will, the boiler's completely gone. We've had a new one fitted on your behalf. That'll be £1,200, and it's due by the end of the week. So, a £1,200 loss thrown right at me there, right out of thin air, on a Monday morning as well. And that's what Richard's talking about. Whether it's trading, whether it's property, whether it's business, these losses happen. These costs of doing business happen. It's just part of the job. Anyway, hopefully I've explained all of that well enough for you all. I tried to add a few different bits and bobs in there, a few different ideas, perspectives, quotes. Hopefully the video has added value for you all. Again, I'd really appreciate if you take just a quick second to hit that thumbs up button and drop me a comment if you would. But that aside, I'll leave it there for today. And as always, trade with Edge, with consistency, and I look forward to having you back here on the channel soon. Thanks, guys.